There are two kind of reasons behind the resilience of the market. First is policy supports, provide the downside protection. And second is the rise of AI and also new consumption, sort of structural opportunities driving the key part of the index. That explains why the market can rebound so quickly from the trough, from the sudden outside shock. But going here, as standing at this point of time, the market already go back to its level, and also the risk premium recovered. So it hover around this level because it needs more catalyst. Its risk appetite already back to the level around end of September and the peak of October. So that's where we stand right now.
Yeah, on a year-to-date basis, the Hang Seng Index is traded up 15.5%. We've seen a lot of activity in the IPO arena. Bonnie Chan, Hong Kong ex-CEO, talking about 150 companies in the pipeline. Is the confidence back in the market?
Well, a lot of reasons, but yes, in short answer, a lot of increasing trading activities, turnover attract a lot of companies, and also fund managers' inflows. There are successful examples to show that it's a good market. A lot of companies willing to come to Hong Kong. There's called cluster or scale effect. Also, companies might have their own strategy to go global, need to raise money, need to have more foreign shareholdings here, and companies can get easier access to funding in Hong Kong. So overall, we think the IPO momentum have more legs to run in the near term. And it also, in return, benefit Hong Kong in the longer term because more and good quality companies will attract more funds to come and back. But bear in mind, rising liquidity supply in the near term might change the balance of the demand and supply, but the longer term is a good thing.
Yeah, as we look at the IPOs, of course, and names like Shein, where it eventually chooses to list, would it be in Hong Kong or in London? I guess that's really up to the CSRC to decide. I've been tracking the AH premium. We've had the recent listing of Contemporary Amprex, and it is still traded to a premium to its A-share counterparts. Now, this is rare. There's only a couple of stocks that hold this. Contemporary Amprex is one, BYD, China Merchants. I did get a chance to speak to Bonnie Chan yesterday. We were at the Capital Markets Forum, and I put the question to her about this AH premium. And let's listen in on what she had to say, and we'll continue to talk to Kevin.
The ability of these domestic Asia-listed company to pursue another listing in Hong Kong, by in itself, it's very attractive to both the companies themselves as well as investors around the world who want to partake in that investment story. And on this A to H phenomena or trend, we have already received over 20 applications which are being processed at the moment. And there are another 20 plus companies, A-share listed companies, which have already announced their plans to list, to pursue another listing in Hong Kong. So I think with that becoming a more prominent phenomena, I would say that probably will help further draw the attention of international investors. And with more trading activity, hopefully, we see that spread between the A-share and the H-share price narrowing.
Kevin, this is the world's largest IPO so far this year. Contemporary Amprex, the world's biggest EV battery maker, and the Hong Kong listed shares are traded at a premium to its A-share counterparts. Do you expect this rarity to last?
Well, that's a very good example to show that although the overall economy or overall confidence might still need some time to fully recover, but good company, good quality company is still going to attract a lot of investors, including foreign investors. And also this kind of a premium trading to A shares reflects the different appetite among different investors. So foreign investors, even for those long-term, long-only investors, have some doubts regarding the full recovery of the economy, but they're still going to have confidence in this specific high-quality company. So for certain company, yes, this kind of a premium, back to history, there are also certain companies show this kind of premium, but it's all matters to the quality of the company itself.
In terms of your coverage, you are the Hong Kong market and offshore Chinese companies. So would that naturally mean that you prefer H shares over A shares?
Well, in general, yes. At this condition in this circumstance because H shares has more upside and also has with its better structure, new consumption, AI, internet, and even healthcare, which we have a relatively fewer options in the onshore counterparts. So its upside is structural opportunity and structural stories are kind of a better fitting into Chinese restructuring economy.